After Monday's market turbulence, the Federal Reserve's challenge in its upcoming policy statement tomorrow is to sound reassuring while acknowledging that it prepares to undertake the major step of tapering of the bond purchase program. The Fed will release a policy statement along with the economic and interest rate forecasts that it issues quarterly at the end of the two-day meeting Wednesday afternoon. Fed Chairman Jeremy Powell is expected to brief the media at 2:30 p.m. Eastern Time tomorrow. Central Bank is expected to indicate that it is getting ready to announce it will start paring back its $120 billion in monthly purchases of treasuries and mortgage-backed securities. They are probably going to lay out that they had a discussion on tapering. They're probably not going to provide many major details. The Fed's meeting began Tuesday, September 21, following a turbulent day in global markets on worries that China's property developer Evergrande could collapse and spread the contagion outside China's borders. It affected even the risky assets such as the cryptocurrencies and Bitcoin in particular. S&P 500 had its worst day since May on Monday. Would we see such a similar event? Yes, I think one is coming next week. Stocks have stabilized a bit on Tuesday, although the rebound did not last large as investors look to the Chinese government to contain the situation. So, one can expect the Fed to cut back the purchases at a pace of $10 billion in treasuries and $5 billion mortgage-backed securities a month once it starts the taper program. So it's a very delicate statement. And I believe that post 1 p.m. you will see whichever way you may see the markets get rattled and the Dow starts slipping once again. It may even end in the red. By and large, tapering is a market moving event, and one definitely needs to keep an eye on what and ears open on what Fed Chairman Jeremy Powell says tomorrow. But even before, concerns over what he's going to say could rattle the markets, and we can see once again a turnaround in the entire session tomorrow from 1 p.m. approximate timings. Well, these are the situations where while the Fed's move away from asset purchases may be well broadcast, strategies you can expect as far as strategy is concerned that the interest rate forecast may be a wild card for the markets. Tied closely to that will be what the Fed's expectations for inflation are. In June, it forecast 3.4% for the personal consumption expenditure inflation index this year, before falling back to 2.1% in 2022. Also in the June forecast, the Fed officials had targeted the first two increases to the Fed funds target rate in 2023, but there's a risk that this could change. Any change in this direction, friends, could rattle markets. Two officials had expected a first hike in 2022 as far as the Fed minutes go, and many market pros bet that there could be a hike at the end of next year. Where do I see? First of all, as I said, to sum it all, I expect the markets will not take it very lightly. It could be negative for the markets. We can see a very difficult and a negative afternoon session. So, all in all, to sum it, to cut the long story short, I expect September 22, 2021 could rattle the markets in the afternoon session, coinciding with Fed Chairman Jeremy Powell's statement. Stay calm, stay patient. Are we expecting a beginning of a stock market correction, friends, based on what Jeremy Powell says tomorrow? Stay tuned. If you're still not subscribed to my YouTube channel, please do not forget to do so. Do it right away and be a part of the wisdom pack of predicting. We will tell you where exactly the markets are headed from here, short, medium term, when the big fall is coming, When it could start, when it can end, I think it is coming in 2 stages. Fall, rebound, again rebound. Should be a very, very great situation. You need to master it, and you need all the skills in the world to understand where the markets are headed from here. It's the Fed decisions which has turned the markets in many phases, and this time it's going to be no different, friends. So hang in there, hang tough. It's been a good market since March of 2020, commencement of the rise post the COVID scare. Good rise. You see global stock markets having really gone to, most of them have reached all-time highs. And the markets anyway look to be overbought in many territories across the world. So yes, there has been some scope. Whether the Fed statement is going to be one of the indications, it is going to be one of the areas which will precipitate a fall in the markets, American markets and world markets, is something that is there and uppermost in people's minds. I believe it's not going to be an easy day tomorrow. In fact, the weeks and months ahead do not look to be good for me. Good meaning the volatility will return. Whether we are nearing a correction, yes, we are nearing a correction. When it will start, stay tuned, friends. I will just tell you exactly where it is, and if everything goes fine, then you will have all this information at your fingertips. You will have them in your hands much before the world knows. This is the efficiency of timing the markets, and the impact of that in the world of investments is massive. You need to know where you are headed, where the markets are headed, so you can make intelligent investment decision. By simply saying nobody can time the markets is just admitting the fact that you do not know how to time the markets. So guys, it doesn't work that way. Only if I give you a road map, you are driving a car, you need a navy. You need to know directions as to where to drive. If you do not know, if you don't have the guidance, if you do not have the map in front of you as to where the market's headed, how are you going to drive? You can say that the road takes you nowhere. That's an admission of the fact that you do not know which direction you're going. Cut the long story short, yes, be prepared. There is, but not right away. There is a correction which is on the cards. You need to be prepared, friends. And yes, be a part of the art of investing and our YouTube channel so we can share more information with you from time to time and discuss all this in great length. Guys, stay calm, stay patient, stay cool. Happy investing. Take care. Bye-bye.